everyone. This is Ashish Pandey from the Economic Times. Well, we saw the Union Budget 2026 coming up with a sharpened focus on MSMEs. We saw introduction of new funds. There were top-ups. There were recalibration of strategies. There were realignment of strategies. We also saw regulatory realignment of MSME definitions. And like what was announced in the last budget in terms of revision of MSME definitions, we saw a continuance this time too. Well, in this context, we have someone very special with us. We have got Mr. Sumit Phakka with us. He is Deputy Managing Director, IDBI Bank. Mr. Phakka is a veteran banker. He has something around 30 years of experience in the banking field. Well, Mr. Phakka joins us today to share how IDBI Bank is recalibrating its MSME strategy and what all it is doing to balance scale with discipline. Mr. Phakka, it's a pleasure to have you on the Economic Times with us. Thanks once again. So my first question, as I mentioned in my introductory paragraph, sir, the Union Budget 2026, we have seen expansion of MSME credit guarantee schemes. And of course, along with that, there's a lot of boost on manufacturing front when we talk about the MSMEs. My first question to you, a straight question would be, sir, is this some kind of structural reset for MSME lending as per you? And if it is so, and how is IDBI Bank balancing faster growth with asset quality?
So this union budget has basically focused on MSMEs in two ways. One is it has tried to build on the already existing digital infrastructure, be it the GST returns or be it the digital footprints of the MSMEs. And second is it has increased the guarantee cover that is available for MSME lending to the banks. So these are the two initiatives which I think would go a long way in making sure that Prime Minister Modi's vision of Viksit Bharat by 2047 and Make in India are truly implemented on the ground. So we at IDBI Bank have already been working to make sure that we have to move beyond the simple collateral-based lending, which has been the norm in MSME lending over the last many decades. We are focusing more and more on tracking the cash flow data, using that data to understand the requirements of the MSME borrower, making sure that we are able to offer them the facilities as per their requirements, not only based on the collateral securities. On the side of whether this is going to make us lend more aggressively or go whole hog, I think while we continue to build our portfolio, we are definitely not letting go of the discipline that is there to be in the portfolio and making sure that our monitoring and follow-up mechanism continues to be as strong. As in past, our focus continues to be on the manufacturing side. We firmly believe that with the initiatives that have been announced in the budgets and in the previous budgets also, more and more MSMEs are getting into newer areas, areas like defense manufacturing or auto component manufacturing, the areas which have traditionally not been MSME areas, which I think would again plug into the vision that India has of being Atmanirbhar Bharat. We are going to be a player there supporting MSMEs in their growth with discipline.
So the budget 2026 that we see, one more thing that we see is that it comes up with a stricter enforcement of the 45-day MSME payment mandate. And when we talk about that thing, I want to ask you, sir, are you seeing some real improvement in terms of capital dispersal on the ground? Or you see the impact will take some time with the intended benefits will come out with a lag? Or you think that the continued cash flow stress will continue again for some time?
So this change that has been brought in, what we are seeing is that there are changes happening on the ground. But they are not evenly distributed. So while the MSMEs, which are dealing with maybe the government departments and large corporates and PSUs, we are seeing much better payment discipline that is coming in. But for the other MSMEs or the ones which are dealing with the slightly less established players, the discipline still has to come in. The challenges are even more for the MSMEs, which are on the smaller side of the scale, the ones micro and the small scale, the real small scale. There, the challenge continues. This actually offers banks an opportunity. So, what banks are trying to do, or at least IDBI Bank is trying to do, is that wherever we are finding that the cash flow of the MSMEs have improved, as I said earlier, we are focusing more and more on the cash flow based lending. That is helping us to assess the requirements of the MSME in a much better way. And this initiative, when it fully gets embedded into the whole system, is going to fundamentally change the way in which MSME lending happens, with more cash flow visibility, with more availability of better liquidity in the system. The usual problems of the MSMEs pertaining to ad hoc requirements, stresses, short-term stresses would be addressed. But having said that, I think this initiative will take some time for it to completely get embedded into the whole system.
So in the last budget, we saw there was a revision of MSME definitions. Now with regulatory alignment on MSME definitions underway, how is IDBI Bank preparing for borrower migration across categories, especially when we talk about the priority sector benefits and pricing?
Borrower migration or the entity migration is an indicator of the fact that MSME ecosystem is maturing. And this maturity of the MSME ecosystem is basically taking us to the vision that the Prime Minister has of Make in India, Make for the World, and local to global. So those things are no longer just statements. They are actually finding traction on the ground. And we consider such migrations as opportunities. Of course, we keep on monitoring our portfolio at portfolio level, at individual borrower level. And whenever we see that such migrations are happening, we make sure that these migrations are smooth for the customer. There are no sudden price changes. There are no sudden changes to the terms of the credit. And these migrations give us an opportunity to continue to engage with borrower and with the MSME borrower, and to make sure that the requirements of theirs, which may have been more to do with the survival finance, we are able to fund them for the growth finance. Such migrations are indicative that there is continued growth that is happening in the overall ecosystem, and we welcome it. And we continue to support whether migration happens from a small to a medium, or a medium to a mid-sized corporate.
So, given the government's push towards manufacturing, exports, and clean technology, if I may ask you, sir, where's IDBI Bank's that particular MSME sweet spot today, sir? And which are the segments you think, sir, which are still underserved?
So our sweet spot would lie somewhere on where the manufacturing and exports and clean tech converge. In manufacturing, traditionally we have been supporting all kinds of manufacturing activities, be it on the light engineering side, on the other small manufacturing. On the clean tech side, we are seeing some traction that is coming in. It's still an evolving area. There are a few entities which are basically trying to work towards being the second level suppliers to the clean tech companies. On the underserved area, I think there are still some areas or some entities which continue to have challenge, especially the very small, or what we call as nano enterprises. The other underserved entities which are there could be the ones which are the service sector entities, which have got inconsistent cash flows, and they struggle to get formal credit. The third ones are the ones which are the first time entering into the formal credit system, so they lack complete documentation and the requirements of a lender that they need to comply with. We at IDBI are making sure that these underserved areas are also served by way of having the co-lending tie-ups, by way of supply chain financing, by way of invoice bill discounting. These are the channels through which you can actually serve these very small and the entities which are presently not completely served.
So now we're coming to the co-lending with fintechs. There's a very interesting concept that has come up. Now, when you see the 80-20 partnership, you're seeing banks coming up with the expertise, they're coming with the capital and regulatory compliance. And then we see the fintech, they're coming up with the faster customer acquisition, also the technology. Against this backdrop, sir, I want to understand from you, when we talk about co-lending with fintechs, is the real gain wider reach, better underwriting, or is it faster turnaround? Also, I want to add, sir, how do you ensure risk discipline against this backdrop?
Excellent opportunity for banks to grow their MSME book quickly. But we at IDBI Bank consider that co-lending is a model which offers us speed, which offers us discipline, offers us agility. So how does it happen? Discipline comes from my side, agility and speed comes from the fintech side. But two things we are very sure of. One is that any co-lending arrangement has to pass test of my credit policy discipline, and any co-lending arrangement is basically an opportunity for the bank to quickly grow its book while maintaining the discipline of a banking and having the agility of a co-lending partner. We have had a few co-lending arrangements in the bank, and in fact, in the current year, the book has grown by almost 4 times. Like we began at about 250 crores in March 25. Now it is almost touching 900 odd crores. But all of that book has been built on our core principle of bank-led discipline and the fintech partners' agility.
So coming to the later part of the discussion, sir, beyond loan interest rates and ticket sizes, sir, I want to understand from you, what is that one particular structured shift that IDBI Bank is making in terms of MSME lending? And what do you think, sir, that truly differentiates your bank from the others in the market?
Traditionally, MSME lending is focused on two things. One is collateral. The other is transaction-based lending. So an MSME requires a particular, they get an order, they come to the bank, ask for a limit, bank gives the limit. Bank is going to ask for a collateral for that limit. And that's way generally the MSME lending has been happening. Cash flow-based lending is something that has only caught up only recently, but we have very sharply focused on two things. One is look at the cash flow, see the requirement of the customer. Second is, what are their overall requirements? Now, those requirements could be more on the cash management side rather than the credit side. So we are going to give them those offerings. Along with this, what we are also trying to do is that as they scale up, we continue to support them. As they scale up, their requirements could be very different from what their requirements were when they were an SME. And we continue to support them either by way of offering our other products. Maybe they scale up, they need a much larger banking support for their employees by way of a payroll package. They could be asking for Forex services. They get into exports, they could be asking for Forex services. We would start offering them the Forex services. So what we are offering as a bank is not a one-off solution, but an overall solution for their, what we call as their whole ecosystem requirements. And that is what I think would differentiate us. To make that happen, what we have done is that across India, at all the major centers, we have set up our credit support centers, what we call as CSCs, which are specialized centers to underwrite the MSME credit only. And of course, in branches, the major branches, we have posted dedicated asset officers who are kind of relationship managers for an MSME. So they look for the overall requirement of an MSME and then they support that requirements. One more thing that we are very actively working on is cluster-based financing. Now that concept has been there for quite some time. A lot of banks are working in that. But how we have tried to be different there is that we have not picked up clusters across every geography. We have picked up very, very focused clusters Those are the clusters where requirements could be very unique. We have been trying to design our products and our delivery platform to support that particular cluster. And that makes our monitoring requirements also for that cluster very different, because that cluster's requirement, while credit requirement could be different, the monitoring requirements could be different. So we feel that with these few unique propositions that we are offering, we are well placed to support MSMEs across geographies.
Okay, so finally, the last question of this insightful session, and I think many who would be seeing you on the video later would be wanting to know the answer of. My question would be, sir, with the government expanding this credit guarantee schemes and the covers and pushing for formalization of micro and nano enterprises, sir, is IDBI seeing a kind of rise in first-time MSME borrowers? That's the first question. The second part would be, sir, how are you underwriting informal businesses, and that too without compromising the credit quality?
You're right. With a lot of initiatives that the government has taken in the recent past, including increase in the guarantee cover, of course, GST trails that are there, digital payment trails that are there. A lot of nano and micro enterprises are now coming to the bank for borrowings. And I must say that this is not an opportunistic borrowing, that it is available, so they're taking. They're actually looking to grow their business, to be a part of India's journey towards becoming a Viksit Bharat by 2047. And we at IDBI Bank are very proud to say that our portfolio is very focused on these small and nano enterprises. In fact, my average ticket size in MSME lending is about 25 lakhs. This year alone, we have supported more than 8 to 10,000 entities with an exposure of about 5,000. These are, I'm talking about the new entities that we have supported. And again here, as I said, that they don't have collateral available, of course. They are first-time borrowers. There would not be very formal papers or the documents that a bank would be asking them available to you. So what we are basically looking for in such kind of relationships, onboarding of these relationships, is that how can I look at their cash flows? What is the behavior pattern that is there by way of maybe digital payments and such, and how I can monitor it post-sanction. So these are the three major parameters on which we are supporting these. A couple of digital initiatives that we took this year. One of the major ones is MSME Express. It's an end-to-end digital underwriting tool in which we are underwriting loans up to 25 lakhs. And usually the sanction or rejection happens in maximum 30 minutes. And the other is what we call as iPrompt, where we are making sure that the small value up to 10 lakh accounts are renewed on time. So these nano enterprises, the small enterprises continues to be our focus areas. And we are making sure that when we onboard them, when we engage with them, the engagement is smooth for them, the engagement is pleasant for them. And as they go on their growth path, the bank continues to be their partner in their progress.
Partner in the progress. Well, you heard what Mr. Phakka said today, and he explained in detail how IDBI Bank is recalibrating its MSME strategy and how it is balancing scale with discipline. So once again, thanks a lot for giving time to Economic Times. Thank you very much.
Thanks for having me.